morning, everyone. Welcome to our Wednesday morning trading room. Sorry for the delay. I was having a few technical difficulties. My internet connection seems to be a little sketchy this morning. I don't know why. All right, so here we are. The market just opening up, and it looks like yesterday was quite the roller coaster, wasn't it? The market did a partial recovery, I should say. After the big downtrend that lasted pretty much the whole morning and early afternoon, the market started to get a little traction to the upside and rallied into the close, finishing the day here around the 59.40 mark, and we're opening a little bit higher, around 59.50, I guess. So we've got a little bit of a gap below us, but the market definitely in an uptrend now, I think we can safely say. Well, sort of. I guess we'll have to wait and see. We'll wait them out for a little bit. Oh, sorry, was I sitting on my mute button? Oh, darn it. Well, all I was saying was good morning. And it looks like yesterday's session was quite the roller coaster. It had the strong downtrend all morning. Early afternoon saw the market recover, partially recover, going into the close. Very bullish going into the close, finishing around 59.40. Opening around 59.50, so we have a little bit of a gap below us, not much. But we do have, or seem to have, a bit of a bullish slant on the day, at least so far. 59.60 was a fairly popular number yesterday. If you remember, we saw quite a bit of activity around 59.60. And so far, well, we're just kind of sideways. Lots of yellow bars here in the hawk, which suggesting we're very neutral. Drifted back toward the hard edge here in the Eagle and the Raptor, and the Falcon working, or possibly working, a trend change signal lower. Okay, so we've got a first micro-macro cross lower now. We're too early to call this a cloud crossover in the hawk, or the hawk, sorry, the Raptor. I got too many things going on here. But that's what's trying to happen. We're trying to get a cloud crossover here. The clouds are beginning to cross. This may emerge with a hard edge bounce still, which would be a buy signal. The Falcon now giving us our trend change signal. So if you were inclined to try a counter trend trade here, it would probably end up looking something like this. So we've come back now with the trend line touch as well as the trend change signal. The trend change signal, of course, occurs when the trend line changes color, and you get this little pattern. You get this down pattern that changes the trend line color initially. You get the pushback, and then you get the market coming back with trend. All right, let's see if there's any follow through now here to the short side. Oh, they slipped me a tick again. 2 ticks actually. Oh, come on, you're so close. All right, well, at least we've hit the break-even trigger, and we're just hovering or hovered above the profit target. So 59.40, remember, was where we left off yesterday. So I guess this is the market trying to fill that opening gap. You could try to run this out a little further if you chose, on the chance that the market would try to pick up the downtrend that it attempted yesterday. Okay, so there's a good little trade. Looks like we're going to come back now with a proper cloud crossover here now on the Raptor. The clouds have crossed. Here's the pullback. Here's the cloud crossover signal right there. Oop, I'm not going to be able to cover it that far. And you have a chance on a second push entry. The slippage here is just crazy this morning. There was a 4-point slip, a 4-tick slip. That is not what I want to see. When the market starts to slip you like that, I'm always wondering why. Why are they slipping me? I know the why. There's slippage because there's not enough orders. Why? Why are there not enough orders? This should be a very liquid market. Are there not enough orders because nobody else is selling? Okay, so I'm going to try to keep my stops just above these swing highs and lows right through here. There we go. We'll make it a 59.53. And it may come into a hard edge bounce here as well, here on the Raptor. If we come out of here with a sell signal, this could also qualify as a double pullback. Double pullback occurs when we pull into the cloud twice, come out with a signal. So here's the first time that we came out with the signal. We pulled back into the cloud. If we come out with the signal again, that's likely to have some follow through. Or not. The buyers are getting a little bit more aggressive here. A little more aggressive than I would like. Here on the Geiger counter, we saw some buying go through. Here's that buying spike that I was watching. right, well, we've had a breakout here above the hard edge, so we'll see whether we get a reaction lower now. Remember, whenever the market encounters the hard edge, you should anticipate a reaction. There's not always a lot of follow-through, but at the very least, there's a reaction. All right, so here now we've produced the hard edge sell. That's that number 3 signal. And as I mentioned, you might see this as a double pullback. That tends to be a pretty high probability signal overall. We'll see if they give us any follow through here. All right, so here we're back and confirming with yet another number 3 signal. Come on, you're so close. Oh, I hate it when they do that. They get so close to our profit objective. and then give us a little bit of a bounce. All right, well, we could bring our stops in above the last swing high. That would put us right about there. Right. If it fails here at 59.50, it's probably going to head higher. We're laboring too because technically this is counter trend. This is going to be the last chance that I'm going to give the sellers. So if we break the low, I'll go one tick below the low. If we manage to break the low again, I'll get my stops down to break even. And hopefully that won't be too aggressive. Hopefully. Darn it. They're still floundering. I don't like the fact that they're taking so long to get some downside momentum going as well, because the harder they push to the downside without any follow through, the more likely it is that we're going to see a rally. All right, here we go. One more bear push. Oh, they just keep flinching. All right, here we'll do this properly. All right, well, here now coming back with that counter trend signal that I was a little bit concerned about. We're getting some bullish pushback, and I guess it remains to be seen how hard they will push. Obviously, with my stops where they are, I'm not going to write out too much of a pushback. So the sellers have got to get busy. No. So you'll want to remember this number here, 59.3738. 59.38, we'll call it. That was a very big number today, and it will likely come into play tomorrow as well. Good question here from Peter. Peter says, good morning, Eric. If you are in a position long or short and yellow bars start to form, would you close the position for a small profit or loss? Yellow bars on the Hawk and the Raptor show neutrality. More so on the Hawk than the Raptor. The yellow bars don't bother me so much on the Raptor. When you see these yellow bar clusters form, you're going to notice that they form more or less at the same price level. Again, just emphasizing the neutrality of the market. So with the Raptor, so I think I forget, where was my entry? 59.40. So Peter's asking, if I start to see yellow bars form like this, do I consider punching out of the trade? I don't usually, no. What concerned me more than the yellow bars was the continued pushing lower without any follow through. Like we had arguably 4 attempts to move the market down, and it didn't. So on that note, I suppose you could use the yellow bar as a cue, but you can see it also produced a number 2 signal, so that also would be making you think, gee, maybe I should pack up my toys and go. But to answer your question, no, yellow bars, especially on the Raptor, don't bother me as much. Well, that was unfortunate because I'm not convinced that we may not see another push to the downside. But that's okay. I took my medicine early. Generally speaking, the market will try to do things in pairs. I don't know why it is this way, it just is. So what will happen is, going back here to our Raptor chart, here was the initial push lower, here was a really long second push lower. I suppose you could even say here's a third, and like I said, here's a fourth. So we've got two sets of pairs, essentially. The market kept trying to move the market down, and it didn't happen. So we're likely to see two attempts to move the market higher, right? We've broken, this is leg one, we've broken our resistance area. There's leg number one. So somewhere through here, we're going to try to see, or we're going to see leg number two. And if that begins to fail or begins to struggle as it did here, then we will see the market start to head the other way. It's almost as though the market does something, you know, like a bullish breakout, and then it looks to see if anybody is there to join them. Anybody else want to buy? And if they don't, well, then of course the market starts to head lower. We do have a little bit of a jumbled mess, though, to be sure. Here is this morning's trading range from 59.61 to 59.38, and currently we're hovering right in the middle. Not a good place to be. Again, because of its neutrality, it's just too balanced. Oops. I was waiting on this number one signal and it slipped past me. Doggone it. So we have a cloud crossover. I may be able to pick this up with a limit order just to simulate it for you. Let's see if they come back and give me that trade on a limit. signal. All right, so I don't normally do this where I try to pick up the trade late with a limit order, but for the sake of the room, we'll try to demonstrate here how this would play out. So we're in the same position as buying the number one signal right here. So we've broken the high, or this swing high right here, broke that. This was the first leg of that move. Looking now for the second leg. First two legs of a move tend to be the strongest. And we have the added advantage of being with trend as well. And I mean the big trend, the overall daily market trend. As I mentioned, it's a little bit dicey taking a signal here in the middle of the trading range, of this morning's trading range. Elmer's asking, Eric, was this after the short red line a proper micro-macro cross? All right. So Elmer's asking, does this signal here qualify as a first micro-macro cross? Even though the micro line, that's a thin one, never crossed the macro line. And I would say yes. Yes, it is. Because what the first micro-macro cross shows you, this is the proper first micro-macro cross over here. Micro line crosses, macro line crosses, everything is in sync. What happens here is everything goes out of sync. So trend lines are out of sync, bar colors out of sync, filter out of sync. Everything comes back and comes back into sync. That qualifies as a first micro-macro cross. So you can get more than one first micro macro cross within a trend. Although it looks like this morning we're really struggling to get any kind of follow through. We had where's the first one? First one right here. And that worked out all right, but after that, this was a reversal one. You probably did not keep your stops deep enough to ride that one out. Here was another one, which is not cooperating. So we've got two high probability signals back to back that are not giving us a whole lot of follow through. That is not good. That shows us a really conflicted market or a really balanced market, whichever way you want to look at it. But essentially that's going to put us in a sideways spin, and you can see the result of that. We're not getting the follow through. Well, that kind of sucks. So we're back now near the lows of the morning. Doggone it, I keep looking. I was looking at my crude oil chart on the other monitor. So here we've got all right, I'm just going to punch in. I'm late on this one, but we've got a number one signal to short now. And I'm going to let this one ride out, see if it doesn't actually get somewhere. Now that we've broken the low, we've tried the market higher. The market was trying very, very hard to get lower. Finally broke the lows. We got our cloud crossover signal. So let's see if we can get any follow through on that now. And it's really hard to tell right now whether this is a counter trend signal or whether this is the with trend signal for the day. Okay, good. Starting to get a little bit of follow through. Took them about 45 minutes to settle in on a direction, but it seems as though they're going to have a little bit of a bearish push now. Suppose this is far enough along that I can get my stops to break even. And perhaps we'll go with the parabolics. Don't bounce too hard. We're down to the primary support now. Steve says, I missed this whole move. It's not an easy move to discern because the market is so conflicted. But when you're looking at a market, the thing I like about day trading is that you get instant feedback, right? You can look at a chart and you can see the struggle. You can see the market trying to head lower and not. You can see the market try to head higher. I bought it. I thought the market was going to go up. It failed, came down, tagged me out. But what does that tell me? That tells me that there's no upside momentum, so I'm going to try to short it. I'm going to try to go the other way. Sometimes being wrong is the next best thing to being right. At least you know which way the market does not want to go. So if I'm pretty sure it doesn't want to go up, then I can look to short it and try to take it lower. No, I thought they might let me hang on there through that swing, but no such luck. But at least it was a profitable move. You know, I've mentioned this before, but as traders, we're always making decisions. I heard one trader describe it as a gray fog, and I think that's probably a good way to look at it. You can just kind of make out stuff in the distance, but not quite. All right, we got a macro pullback signal here. We're getting a trendline touch signal here in the Falcon, so we've got some opportunities to get back on board. Also getting a second push opportunity. You may even want to offer up a couple of ticks and just take it below the low, if you can afford to do that kind of trade. Otherwise, wait for a little bit more of a pullback. I suppose in the Raptor, you could do something like this. Again, taking it below the low. But the better trade, as I mentioned, is to wait for a little bit of a pullback to occur here. Because we're starting to drift a little bit sideways again. You see that? All right, there we go. Did they just slip me again? They did. Another 2-tick slip. I don't like that. I don't like that at all. Way to go, Peter. Peter said, I did that third trade, 2 small losses with the neutral market, caught the last move down for a net profit of $130 on the day. Nicely done. Offsetting your losses and printing a profit. Peter says, booking my tea time, that's it for me. Well done, Peter. That's the way to stay profitable. Nicely done. I remember early on, like really early on in my trading career, I was fortunate enough to be trading alongside a fellow. He kind of brought this whole notion home to me where you need to trust your signals, even when they don't work out. Right, so I tried to short. The market didn't head any lower. I tried to go long. The market didn't go any higher. Does that mean I ignore the third signal? Well, you already know the result of it, so the obvious answer is no. But there's a lot of people who would start to question their signal. His point, and the point I'm trying to make, is that, okay, you took a loss on the first one, you took a loss on the second one, but it's that third one that will probably work out, and if not offset your losses and earn you a profit like it did for Peter, it will help square the books at least a little bit. You never really know which one is going to take off. Yes, you can look at things like the Geiger counter. You can follow the order flow, try to gauge how strong the market is one way or the other. But you're never really sure. So you need to take the high probability signals and have a safety net. You know, I have a pain threshold, it's 5% of my capital. If I'm down 5% on the day, then I stop trading because something's not working right. Yeah, like Peter says here, my new golden rule is no more than 3 trades per day. Can't thank you enough. I really feel I should pay you for these webinars. Well, you're welcome to send me a check. I don't say no. It's a very nice sentiment, Peter. Thank you. But it's so true, you know, over trading will kill you. Hold out for what you think are the best 2 or 3 trades in a day. You can ask yourself, is this the trade that Goldman Sachs has been waiting all day to take? Is this the signal Bank of America traders have been waiting for? If your answer is no, then why would you trade it? Peter says, not only has my trading improved using only 3 trades a day, but he says, so has my golf game, since I get to play more with my profits. Way to go. It's a win-win all the way around. Here, I've mentioned this before as well, in the trading room, I'm a little bit conflicted because I try not only to show you good trades, but I need to show you how the software works. And hopefully, most of those times, those two things mesh. But when I'm trading on my own, I am really a conservative trader. I take maybe 1 trade an hour. I may take 1 trade all morning. There have been times I've taken 1 trade or no trades all day just because the market didn't behave properly. Now, to be fair, I usually try a signal relatively early on the off chance I catch a big move, because the market does tend to move early on. A lot of orders hit the floor. Your best times to trade are the first hour and a half of the day. That's going to be the most active time. And that, of course, is the time that we focus on here in the trading room as well. Okay, so we got a market that's attempting to move lower again. My stops are already relatively cozy. You could take a couple extra ticks out of the trade. We've already produced a counter trend signal, so my concern is we're going to see a little bit of a pullback here to the hard edge. I'm not liking that the Geiger counter keeps pulling here to the hard side as well. That's not looking very promising for the short position right now. Need to see this wheel pull here to the short side, and there we go. It tried. We need to, there, pull over and stick. Stay there for a little while. that's the kind of day it is today. They're just stuck on moving back and forth, back and forth. So we're back into the hard edge. That's the target for the counter trend signal. All right, so here's the hard edge bounce. Looking for, there's the hard edge sell. So the hard edge bounce, and looking now for the market to resume the downtrend, which we started here. It's unfortunate I got tagged on that reversal. I suppose, well, that's always the challenge when there's been a big move, is where do you leave your stops, right? Because it's not a loss unless it gets hit. Right back here to the support zone. Come on, get on through there. Once we get on the other side of this primary support, then I can start to roll my stops up a little bit. or down, roll my stops down. Here my mouse is in the way. Get the mouse out of the way so prices can head lower. Geiger counter pulling now to the short side, which is what I want to see. I guess technically my stop should be at least above this swing high right here. That would be the proper stop. Come on, let's go. You know you want to go lower. Oh my goodness, they are dragging. All right, that's all you get. I'll take the trade to break even. There you go. They want to head lower. Really, they do. They just haven't figured it out yet. And I don't feel like leaving my stop back anymore on this one. We're below the primary support, so hopefully that's going to help hold the market down, but we really need to see the market trade below here. There we go. There we go. Okay, we're getting a little traction now, so I'll move into the parabolic mode. If you wanted to protect even more profit, you could go with something more aggressive, like maybe the bar high low, and I may tee that up just in case I need it. Don't tag me yet. All right. Well, not bad. Little $150 move there. Hooray for us. And that might be all they're going to give on that leg. Pretty much even on the day, I heard the Falcon trade work out here, so after a little bit of a pullback, see this Falcon trade drives home the point of having a proper stop as well. Like so often, traders are tempted to put their stops right there, right? Because you don't want to lose too much. Well, is your objective not to lose too much, or is your objective to make money? Because, as I said, there is such a thing as a proper stop. In this case, your stop should at least be above the last swing. You could use the median line here, which is what I did. If your stop is not hit, it is not a loss. So even though we had a reasonably strong pullback against the position, against our short, it eventually tailed off and hit the profit target. Had you jammed your stops in really tight, though, you would have been stopped out on this first little hiccup. And sure, it may only have been a $80 loss, but what's better, an $80 loss or a $100 profit? I know I don't mean to sound facetious, but it's how traders think. And then they wonder why they can't make any money trading. Because they keep shooting themselves in the foot. And worst case scenario, had I been hit here for the $360, that is an amount that I can afford. So, you know, I've harped on this before, but trading is twofold. It's not just finding the right signal. As I showed you the other day, you could have a 98.5% winning signal and not make any money because you're only trading for one tick. And obviously you can't make money trading for one tick. Okay, Elmer's asking, Eric, it looks like if I hit the buy and sell market buttons, my profit and stop and break even are different from the settings I have if I set the price with the submit button. What could be wrong? Okay, so what I perceive Elmer is talking about is he has his order like this, and okay, well, if you hit your sell button, you're going to go into a market order. All right, I'll give you the answer anyway, and you can decide for yourself. If you go over to your strategies window and you click on your trade manager, remember, while your trade manager is on, you can't make any changes, so you actually need to turn it off first and then click apply to turn it off. But if you go up here to the very top, you're going to see this value here, invalid trail stop ticks. What that is, yours is probably set at 10. I found 10 ticks too tight. This is the value that your trade manager will default to when you hit your buy or sell market buttons. So in my case, if I hit the buy or sell market buttons, I automatically get a stop 30 ticks away. Now that's a reasonable stop for me. I know I'm not going to risk too much, but it's also far enough away that I can grab it and I can adjust it as needed. A 10 tick stop is going to be so close to the market, going back to this signal, a 10 tick stop is going to be right about there, and it's going to be so close that if the market is moving quickly, you may get stopped out before you can actually grab it and move it away. So with a 30 tick stop, or you make it 40 or 50, it's only an initial stop, right? So it doesn't matter. Even if you make it, say, 60, it's going to end up here somewhere. You can grab it and you can move it wherever it's appropriate. What you don't want is to get tagged as soon as you get into the trade. You got to go hunting for your stop, you got to grab it and move it out of the way. Better that it starts out of the way and then you can grab it and you can move it into where you want it to be. So that's what's going on, Elmer, is your buy and sell market buttons are defaulting to that value that's in your trade manager. And if you are able to set up your trade, set it up like so, your submit button will give you these parameters. If your trail indicator is enabled and you hit your buy or sell market buttons, your stop will default to wherever your stop strategy is. And again, that may turn out to be a little bit tighter than what you want. So here too, you may choose to go with something a little bit more conservative to start, knowing that you can always take your stop and you can move it out of the way once your order goes live. So just to demonstrate, if we have no signal here whatsoever, but let's say I hit my buy market button Notice I get my stop. I can now adjust my stop as I see fit. If I have a stop enabled and I hit my buy market button, I get a stop down here, and once again I can pick it up and I can move it wherever I need to. All right. So that's how that works. Yeah, Elmer asks, and the break even and the profit should be as per your settings. So going back here to the strategies window and your trade manager. So I have my auto break even enabled, so it's turned to true. For the Falcon and the Raptor, I have a 15 tick break even trigger with a 1 tick offset. So I'm going to try to capture 1 tick profit. I have my profit target set 100% at 20 ticks. Actually, you know what, Elmer? I don't think I do get a profit target. So if I hit the buy market, oh yeah, no, I do. I do, yes. So it will default to whatever those settings are. Yes, you're correct. I remember that was an issue with the earlier trade manager, that if you hit the buy sell market buttons, you would actually, you just got in, and if you had your stops enabled, you'd have a stop, but you wouldn't have a profit objective. But they've tweaked that since. So if you hit your buy and sell market buttons and you have preset profits and profit objectives, then it will default to those values as well. Okay, getting a little bit of an uptick in the market now. As it looks like the buyers might be taking their turn. Overall, it's been a little bit more whippy today than I thought it might be. A good move early, a half decent move to follow up, and now we're kind of drifting sideways, and it does look as though the buyers may try to push to the upside. So we'll stay with them for a few more minutes, but we're almost through the morning session. Lots of yellow bars still here in the hawk, telling us the market's kind of sideways. Come into the hard edge. We did produce a number 3 signal. I would consider another short here off of a follow-up number 3 signal. Again, that would qualify as a double pullback. But it's been a difficult day, to be sure. Trying to do a cloud crossover, maybe. We got a first micro-macro cross and a late filter entry signal here on the Falcon. So if you're looking for that bullish follow-through, that may be it right there. And I don't know if I want to commit to 2 contracts on that. See if they give me a second chance to set this up. There we go. Okay, don't stop now. Let's go. Come on. Just get over that hump. Here, we'll give you a little push. Look at the width of some of these bars that are printing. Look at how narrow they are. It just shows you the total lack of volume going on here. So that bar, 172. This bar that just formed. Okay, well that one at least had 1400. And this one here had almost 2400. That's a little better. But these bars that are whisper thin, 177, that's nothing. And I suppose that's to be expected. Given the time of day. We're kind of into the lunch hour. And the market's just kind of falling flat. All right, boys and girls. I will see you again tomorrow. If you're trading this afternoon, I don't know, the overall bias has been down, if you can call it that. I would not be surprised to see a little bit of a push up here. I don't think we're going to see a full-on trend resumption for the buyers. I think the rest of the day is probably going to continue to be a sideways mess. So be careful. I will talk to you tomorrow.